Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a great day. Let's take another look here at Bitcoin. A pretty aggressive pullback here yesterday that sent a lot of altcoins and a bit of a tumble there. Quite a big correction once more again, as per usual. We can probably expect this to continue to happen as the price becomes overextended. Altcoins are, they're kind of on a razor's edge right now with Bitcoin being closer to that $100,000 mark. So we're going to talk about that. Good news is this 0.618 fib level so far holding strong. While we wicked down below it, haven't truly closed it below 99,700. So we can presume that support range is still going to maintain itself. We're going to talk a little bit about liquidation levels and just kind of talk about new resistances too, because the price action is probably not done pulling back, is my guess, just based on what we've seen here so far. And it's best to presume it could get worse before it gets better. That's generally the best way to interpret the market. And then obviously we're going to look at some trend lines too to identify, when trend reversals are, potentially due to happen. Is it going to happen right now? Probably not. Just based on glancing at the charts, there's very little confirmation that we're back on track. We are establishing higher lows so far. That's a good start, but I don't think we're out of the woods yet. Anyways, let's take a look at liquidation first. Left-hand side here is the last 7 days. We can see there's still a chunk of change between 96 and 99K as a rough estimate. So we could very well see that lower that lower area retested. I have talked previously about that support range being between 97 to 100,000. So that kind of speaks to that. So hypothetically, we see the price pull back any further. 96, 97K should be the initial, the tentative bottom, I guess you could say there. But as far as liquidation on the macro, we can really see that there's still a lot of liquidation back down as low as 90K. That's pre-existing. We don't need to worry about that. That's been there for a while. But just know that that's relevant and a thing potentially if we end up staying in the 90K range for longer. Okay. At this point, though, we can see liquidation delta. We're at about 10 to 11 billion in liquidation delta to the downside. What this basically tells us is that there's there's basically $11 billion worth of shorts that are in play versus longs. So that tells us people are more gravitating more towards shorting this coin. And I side with that, obviously, right now. I wouldn't say you want to short at support, but generally speaking, the shorts are in play right now, and we got to respect the fact that the trend is down. Until that changes, we don't want to trade against it. And this is not like one of those buy the dip situations. It is if you're going to be adding to your spot bag, perhaps, but as a leverage play, it's generally best practice to avoid taking these kind of trades here just because they're higher risk, right? Again, we want to take lower risk trades more consistently. That's generally the concept. Half the reason why we took an AVAX trade yesterday, for example, or no, sorry, day before rather, but we got 53% out of AVAX on a short there. Hindsight's 2020. I really wish I had shorted at 104.7 like I was planning to do. And it's unfortunate, but it happens. But I just didn't want to be risky and trade into the Fed meeting. Even though a lot of the fundamentals, outside fundamentals rather, the technical charts were telling us that a bearish divergence was forming. We've lost our ascending trend line. There's a lot of reasons why, the price action pulled back and continued lower. But once more, it was more so a fundamental catalyst with the Fed meeting there, and just the fact that inflation is going to continue, and we have less declines next year. In other words, I think we're only going to have 2 rate cuts next year, and they're very small. That's essentially the concept there. So anyways, we can see 101.7. That's the local point of interest there for most people. That's the open interest. So people are pretty heavy at 101.7 right now. So they're currently underwater, just to give you perspective. But 101.7 is close to that support range, so I totally understand why folks were buying in there, because that was supposed to be the initial support for us. It really didn't happen. It inevitably just became a potential resistance here. We'll talk about that in a minute, but overall, at this point, this isn't like dire straits by any stretch. The heavy liquidation has been swept. We can kind of check that off the list. We still got our support range down below. I think we're looking fairly decent for the most part. Let's look at the daily time frame, see if there's any type of divergence here, and just kind of go from there. And we talked about this previously. We were talking about being above the 20-day SMA as a positive sign. We're still technically there, and there's a lot of confluence here at 99,700. Just say round number 100,000. We have the 20-day SMA hanging out there. We have a decent amount of control based on volume from previous time frames, and also, of course, we can recognize that that 20-day SMA is right there. Also, note here, this is that volume I'm referring to, that volume profile, 96 to 99K. Coincidentally, there's a lot of liquidation there. That's essentially what we're seeing right now as potential support. A lot of what happens though is if the price revisits that area, we'll probably see a sweep down as low as 96, 97K and then back up. So it wouldn't be terrible to have some long limit orders in the 96 to 97,000 range, just because even though we have that strong point of control, market makers are super good about getting people to shift bearish and to get you to try to short into a divergence, of course, and then rip the price right back up and just destroy your account. So please be careful, trading with high leverage. But the simple way to understand it here is that I think 97 to 99K is inevitable at this point, and that would be a good consideration for a long, not necessarily here at 100,000. Just again, speaking from years of experience, it's a very consistent thing that they do. At this point here, they're trying to get you to commit to a bearish type of setting, which it's probably still going to work. Don't get me wrong; you could probably short to like the 97K range. However, the general idea here is that it's best to, in most cases, to wait for a long now that we're testing support instead of shorting into a key level support range. Okay, that's just generally the concept. So, anyways, that's kind of that. Let's look at the moving averages, RSIs, etc. Everything's looking pretty normal here. This is very standard for this kind of pullback. We can see MACD's diverging. A lot of things here that were kind of giving us a hint yesterday when we talked about this, and how I mentioned that shorting would be a better consideration than a long at this point. While I still think shorts are probably going to continue to prevail for a short while, I don't love shorting into a key level support. So that's just me personally. A lot of breakout traders prefer to do that, but again, breakout traders are fairly unsuccessful in the market that we're in right now, just because of how manipulative the whales are. Okay. Either way, 4-hour time frame. We can see here we're below some important levels there. So until we're back up over the 20, at the very least the 50-day SMA, or switch that around rather, the 20-day at the least and or above the 50, again, hypothetically 103,000 or higher, then we don't really have a leg to stand on. There's no reason to consider a long. Okay. While the price could still recover to that level, the chance of it rejecting there is quite high. We can see some consistency here with some candle wicks and of course the local bodies. So let's go ahead and do this here to make it kind of simple. We can kind of see this little range here at roughly 102.5 upwards of 103. So I would say just loosely 103,000 based on previous closures and or 102.5. That's the new resistances for us. So hypothetically, just as, again, strictly hypothetical, say the price recovers back up to the 102.5, 103 range, that would potentially be a good area to consider a short position. Okay. Again, you want to revisit when that happens, but if that were to just say shoot up right now, for example, I'd feel comfortable taking a short in that range, just based on how much divergence we see here. We're under 50 on the RSI once more, just reaffirming the fact that we're still bearish. Money flow index is pretty low. You will oftentimes see a bounce or a pivot, which we've already seen, honestly, when we bounced off that 99K range, when the money flow index is below 20 and the RSI is closer to 30. So again, this is generally a common place for folks to take quick longs for that little dead cat bounce, which we did kind of see here so far. Because again, we haven't established higher highs yet, so we're not back on track by any stretch. Okay. So don't let anyone tell you otherwise. And again, it's not to say that they would be wrong per se. They would just be statistically less likely to find success going in that direction, as you would be too if you try to force a trade right now. So I just don't recommend taking a long in this certain circumstance. If you're going to take a short, make sure you're securing some profits before that 96 to 97K range, just in case, because there is a lot of support there. But if you look at our local areas of control here, kind of zoom out, ever since we've been in this 100 plus K range roughly, you can see the most amount of volume is 101,200, 101.2. So it's going to be somewhat of a resistance range for us. It's also that 0.5 fib level. So there's a lot of confluence here telling us that until we close at the very least above 101,000, we're going to be in a position where the price action is probably more likely to go down than up. Okay. So me personally, if I'm going to be looking at a short, I'd be looking at kind of a tighter short to the the 97 to 98K range, right in that range. I like little 2% movements on Bitcoin at 10x leverage. That's basically how I trade it. Anyways, last but not least, Ichimoku Cloud, we can confirm well below the cloud. The cloud is reaffirming this resistance range between 101 and 103. And then, of course, conversion line below baseline, lag and span spring clear. There's zero reasons, pretty much, very minor reasons to take a long, except for the fact that we're at support, and a lot more reasons why a short is more viable. And I know it seems contradictory because I'm saying try not, it's probably best not to short into a support, but at this point here, further downside almost just seems inevitable. Okay. So just be careful taking longs. Buy the dips that you prefer to buy based on spot, spot leverage trade or spot trades. Just don't get crazy with leverage. That's all there is to it. In situations like this, it's usually best to kind of wait on the sidelines. Like yesterday, I was pretty much just like metaphorically eating popcorn and watching the chaos ensue. Happy that we had a short position open. Wishing I'd opened more shorts. Sure, hindsight's 2020. But at this point here, folks, less is more, and the market, the way that it gives and honestly takes a lot more frequently than it gives, you want to be careful putting all your eggs in one basket or using too much at any given time. No more than 5% of your total portfolio should be used per trade, and if you're using more than that, you're just being irresponsible. I get it. Some people have small portfolios and they try to build that up, but oftentimes they're the ones that get destroyed the most frequent. All right, the market makers know that. So, anyways, I'll post a playout chart on the Twitter, on our Twitter, Telegram, and Discord. Join us over at Bitunix too if you haven't already. Awesome exchange, link down below for a nice deposit bonus. And this is what my Twitter, Telegram, and/or Discord looks like. Feel free to check it out. It's really cool stuff. But again, congrats to our community members for not getting destroyed yesterday and just having some faith in the system. And I'm glad that we waited to trade, honestly, because trading into that Fed meeting is just it can be disastrous, as you saw there. A lot of folks I hear took some longs going into it and got absolutely demolished. Anyways, thanks again so much for your time. Look forward to seeing the next one. Have a great rest of your day. Take care.